And now I want to talk about where we are currently. So things have changed. That was 18 months ago. Now, today, you trade futures. Tell me a little bit about that.
I trade three markets: Euro stocks, oil, and T-notes futures. I find it more comforting because, as I was saying 18 months ago, I am a price action trader. So I see the price and I trade what I see, or at least I try to trade what I see. And the futures trading, the benefit of futures trading is you can see the orders, whether those are the executed orders, which is the so-called tape, or whether it's orders, limit orders on the ladder, which are waiting to be executed. This is purely to do with the price.
Yep.
Purely to do with orders. And this is one thing that I really believe in. This is what I always believed, just the price. And the price is a result of orders, buy or sell activity. So it's futures market is something that I found to be my style.
Suits you, exactly.
Yeah.
And that's the thing as a trader, is finding what's right for us and our personality. You're a very analytical type personality. We were just having a coffee before we came in, and you were talking about the statistics and just wanting to know all of the information. You've got a very mathematical mindset, and that comes through from your background, your professional background as well. So you find that using order flow helps you, and it's far better for you, and you wouldn't be able to trade without it now. I mean, I don't even use order flow. I used to. We were talking about this earlier on. So where you are now, let's go for an example. So prices come up to a resistance zone. You're looking at the order book and the time and sales, and we don't know. On the chart, prices come up to a level where you say, okay, is it going to break out of that level, or is it going to reverse? How do you read both the chart and the order flow at that point and the time and sales to make a decision as to whether you think price is going to break out of that level or not?
I think there are several things. Obviously, I'm hoping for a breakout because I'm trading breakouts. But there can also be a reversal. Where you don't see the signs of reversal, that means the breakout will happen. What I mean by signs of reversal is I'm checking the order book. If I see heavy orders hanging there on that resistance, and we keep buying into it, I see the tape printing buy orders, and these offers are not moving, they're not budging, and they just keep being stubborn. So I can see on the ladder that we just keep pushing and pushing, and they're not giving in. I would be hesitant to do a breakout trade there. Doesn't mean I will do reversal trading. It doesn't mean that, but it means there's indication that maybe there is too much selling pressure here, which I can see rather than just look at the chart and guess whether we will break or not.
So what you're seeing are lots of offers or lots of sell orders for our listeners. So you're seeing lots of sell orders on the book there on the ladder, and they're not being pulled, basically. They're still sitting there. So if in a different situation you start seeing those offers being pulled, then it might be more likely that it's going to break out.
Absolutely. And just simultaneously looking at the printed executed orders, the order flow, and comparing that with the order book. If, say, we have 3,000, 4,000, 5,000 orders sitting on top of that resistance, and then suddenly they start decreasing, people are thinking, okay, we might break. Do I want to be here? Do I want to sell here?
Yeah.
You can see all of that thinking happening, and people start pulling their orders, basically. That's the time when I get prepared to buy into this breakout.
Yeah.
So it's almost like you have a one step ahead view of what could happen.
Yeah.
And also I think it's combination of three things. So the chart, the order book, and the order flow, and they have to work together.
Yes.
Because the same scenario can happen at any point, but if it's not a significant resistance level or significant support level, then I'm not interested in that trade. So.
Okay, so you're looking at consolidations, areas of consolidation, then breakouts from that area. Now, So therefore, you're more of a trend-based trader, or
Yes, I think when I was trading spread betting before just the
your early
cash
days?
market,
Yep.
I was this kind of compulsive trader. So I would, oh, the move happened, I want to sell this rally. Sell-off happened, oh, this is cheap, now I want to buy this.
Yep.
And constantly being in that kind of counter trading mindset.
Yep.
I would say now I probably do counter trading 10% of the time, if not less.
Yep.
Because in my experience, the observation shows that you are better off going with the trend because there are just more opportunities. And as seductive as is this idea of the reversal, the huge big reversal, but how often does that actually happen where you have full reversal? Not in the markets that I'm trading. Maybe this is the case with currency pairs. I don't know. I don't know about the markets I'm not trading. But it's better to go with the trend. So I would say I'm a trend trader.
Okay. What's the hardest part of trading?
Taking a loss and being okay with that.
Okay.
It sounds a bit strange, maybe. Hitting the daily loss and saying, I'm a trader. I knew this was going to happen. This is part of my profession now. And I'm just going to either walk away or just sit and watch the market until the end and do nothing.
So having a strength of character to be able to walk away or just watch the market for the rest of the day, knowing that you've hit your daily stop limit and you're not going to trade again, whereas a lot of traders out there will then start trying to trade to make back those losses. So doing that, and what else was it we were just saying? No, we've lost that. Okay, so
Having the patience.
having the patience to actually sit there and trade in the right way.
Yeah.
Okay.
And it could be that, and it happens all the time, that yes, after, and I would say even I have a daily target. So after I hit that target, for now, I'm operating in that sense that if I hit my daily target, I'm not taking the next opportunity because I have done my stats. And based on a 200 sample of trades, I'm better off not trading once I hit my target. So having that,
Interesting.
really being strict with yourself, not going, okay, this one time, this one just looks so beautiful, this is going to work, this is the 100% trade. No.
Yep.
Done.
Okay, that's brilliant. You've actually given me probably what I was going to ask you next, which was going to be what's the best part of trading as well. You've sort of covered off some of that, but is there anything else you'd like to say around what's the best part of trading for you?
The scariest part is the best part, is knowing that something that is working today is not going to work tomorrow. It might need changing. The challenge of it, that you have to constantly up your game, kind of. You have to constantly be better and be adaptable and not be afraid, just not have that fear, which is like I got used to this lazy, comfortable 3 months where I was just doing exactly the same every month and it was working. And when it stopped working, the fear was over-consuming. I was paralyzed. I was thinking, I can never touch the markets ever again.
Having, I think I've used this analogy before, having a mind like water, as Bruce Lee used to say, being able to adapt to the markets and not being stubborn, especially if you've got a mechanical, very rigid style, it's going to need to be tweaked a lot more if you're trading in a mathematical way. I've got one final question for you because we're nearly up and out of time. What advice would you give to yourself? Let's say we're in a sliding doors parallel universe and you can see yourself from 3 years ago who's just about to start out trading. What advice would you give Lily from over there who's just about to start out? Knowing what you know today, what advice would you give to Lily?
It's going to take longer than you think. Be patient. Patience is the key. And lowering expectations. I always keep saying this, but every time it comes up again, the patience and the lowering of expectations. And having respect, I think, is another thing. Really respecting the market and other people in that market, because there are people who have been doing this for a very long time, and just respect the fact that they put so much effort, and don't think that you can just put 10% of the same effort and get the same results. That's not how it works.
Lily, thank you. That's some brilliant advice there to any traders who are out there. And thank you ever so much for coming in again. I know you came in 18 months ago, but you were a newer trader then. You've got more experience now, and it's fascinating hearing your style of trading and some of the advice that you've given there. It's been a great interview. Thanks ever so much for your time.
Thank you.
Lily Matz. My name's Charlie Burton. That's it for today. We'll be back at 10:15 tomorrow.